I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week and a look forward at what might happen in the next week. And we certainly hope ideas and opportunities for you throughout the show. There is plenty to talk about this week as the background news really moved the markets around. Well, it was Deutsche Bank, it was Wells Fargo, and it was OPEC. All of those caused the market to chop widely, still stuck really in that range it's been in, up near the all-time highs. The S&P 500, we'll call it small gain really here on the week. The Deutsche Bank safety bid came into the bond market a little bit for the early part of the week. And then Friday, as some news came out that there was a potential for some kind of an agreement between Deutsche Bank and the Department of Justice for some smaller amount of settlement, and also people coming out and defending Deutsche Bank as not being in that much trouble, Deutsche Bank had a big rebound in there. So overnight on Thursday or Friday morning, down about 7%, and then rallies to up 14% during Friday's trading session. So lots of movement in there, and that gave the whatever flight to safety bid that was in the bond market disappeared, and the bonds had a pretty good downside day on Friday, leaving them with only maybe a small little up week depending on how things close. Gold market, no safety bid in there. If anything, the possibility that Deutsche Bank was Lehman or Bear Stearns gave them a sense that, well, people had to raise cash, it would be a deflationary scenario. So the gold market never really got much of a bid this week. In fact, probably down, we'd say, in pretty much of a narrow range. The dollar tried to rally each day as a flight to safety bid did come in, but then it got batted down very quickly. And we've been negative in the dollar, looking for it to roll over and have a pretty good sized decline. We actually think that will happen. Oil, the big mover for the week on the OPEC deal. We'll give you the details of that when we get into our 60-minute chart in just a moment. But up 8% in the week, the last 3 days, really storming on the upside. So big move for the oil market. It takes all the energy stocks with it, which gave a lift to the market when that news came out, had a good upside spike. So let's talk a bit about these bank stocks, because they have been so much in the news. In fact, they have weighed on the financials, which when they did do that, of course, we had the market acting soft, at least for periods of time. Wells Fargo, I want to take a look at that chart for you so that you can see the look in here of trouble. Take a look right in here. This is Wells Fargo, the daily chart, just so you get an idea of what is going on with this scandal in here. So here is the news that had come out in Wells Fargo over their sales practices right around over here, and all of a sudden we get this big selling wave that comes as the stock falls from around 50 to around 44. So here's what happened for the scandal. They opened, because of their incentives, the salespeople were encouraged to do some awfully weird things. They opened accounts and transferred funds with no authority. They applied for credit cards without customers knowing. Some of them got stuck paying fees. They issued credit cards and created PINs for these clients. They created fake emails and enrolled them into the online service. 5,300 were fired. They refunded $2.6 million. and Wells Fargo agreed to pay some $24 million in fines. So that's essentially what happened to Wells Fargo in here, and yeah, that's been some bad news for the company. It's getting punished in the markets for sure. This is one of the giants in what was a really well-run bank. You know, now you've got the government all over them. Elizabeth Warren just screaming about this. Maxine Waters absolutely just going crazy about this. If you would have seen her on yesterday as she was talking about breaking up Wells Fargo. She's going to pass legislation to break up Wells Fargo. Just seething, angry. You know, I got to tell you that it was Maxine Waters and it was other people in the government that encouraged the banks to do what they did. You don't believe it? Take a look right here as we look at this quick little short video of Maxine Waters as she is defending Fannie Mae and Freddie Mac and affordable housing.
Outstanding leadership of Mr. Frank Raines. Everything in the 1992 Act has worked just fine. In fact, the GSEs have exceeded their housing goals. What we need to do today is to focus on the regulator, and this must be done in a manner so as not to impede their affordable housing mission. A mission that has seen innovation flourish from desktop underwriting to 100% loans.
100% loans. Is that amazing? That is Maxine Waters, who is screaming absolutely about Wells Fargo, and you can see it was she and Barney Frank and the Democrats and Clinton that created the housing bubble, that created the crash that we had. Because they were encouraging banks to do what they did. And that's the proof of it right there. It was all of them. And now you have this nearly 150-year-old bank in Deutsche Bank. They've gotten into a lot of their own problems. This is a massive company, Deutsche Bank. 100,000 plus employees, 70 countries that they're in. This company has been in a lot of scandals. Don't forget the LIBOR manipulation, the gold fixing, and the stock has come down from $160 in 2007 to $12 this week. So it's been punished at this point. And so now the Department of Justice, the company's only worth about $17 billion market cap. They want to come after it. They said $14.5 billion. That's what the regulator said. So essentially they're going to rape the company for all of the assets in there because of what the government created. Man, I am sick about this. And they've done this to a lot of the banks. Truthfully, you know, there is liquidity fears now because of this, and the hedge funds, they started to pull money out. I'll show you that on the chart we're going to look at in just a moment. But then the report comes out of some multi-backed bank deal. Yeah, the European banks, they're in a lot more trouble. They have legacy issues that didn't get solved, like a lot of the banks that the government pumped money into, probably illegally to some of them, in this country. So the banks in here in this country are better, but the banks in Europe, they still are a lot of shape, and look for more trouble out of the European banks. Italy is in horrible shape. Those banks are in a ton of trouble. Yeah, we're getting a bounce right now. Yeah, they might make a deal with Deutsche Bank, but we are far from out of the woods in Europe here with these bank troubles. So I wanted to show you that, and I want you to see where the blame belongs, not the blame that we have seen here in these the banks that they are punishing so badly. Yeah, some of them deserve it, and some of them did illegal things, and you see what the people at Wells Fargo did. They deserve the punishment for that. But overall, I mean, you got to look to the source for the bank troubles, and it's our U.S. government, Federal Reserve, and especially the Democrats in Congress that caused it. So I can't talk enough about this because, well, I'm worried about my grandkids. and that's where we are right now. Let's take a look at what happened in the markets in this last week, as we've had a somewhat volatile week, I would say. Here's our 60-minute chart right here as we look on Monday. So what happened in here? We have Monday, you could see in the gray area that it looks like it had somewhat of a down day, right? All the way down and all the way down through the trading hours. That's the white section right over there. Stocks were weak as Deutsche Bank, Merkel came out and said that, well, there's no state help for them. Actually, the regulation is that the haircut has to be taken by the investors first before any money can come in, and that was what Merkel had said when other countries' banks needed help. So they said no state help for Deutsche Bank, and that started to break things down. And fears grew that Trump had won that Trump will win, and that wasn't priced in the market. The yen had a jump, and Kuroda tried to talk the yen lower again, and oil up ahead of the producer meeting. New home sales down about 7.6%. On Tuesday, U.S. markets, post-debate, they got a pop in here. Man, liberal media was really spinning a Trump loss, a Hillary Clinton win, and that really got the market moving to the upside early. But then there was more Deutsche Bank worry. Their credit default swaps went to a record high. Stocks waffled a lot, but then got some pretty good move in here after the debate as the pundits really started to argue who won, and it seems like the media was winning that Hillary won. I give the edge to Trump on it, and I'm telling you, I'm a libertarian, so there's a lot of things that I don't like about Trump either, believe me. The oil was down big as hope fade for a freeze. Consumer confidence beating home prices. They were up 5% year over year, which is pretty steady. On Wednesday, stocks were steady. They kind of moved sideways in here. Not a lot going on until the OPEC news came out right over there. News came that OPEC had a deal for a freeze. They were going to cut from 33.5 million barrels a day to 32.75 million barrels a day. This was a preliminary agreement, but it got oil moving big, and the energy stocks exploded in here on this news. So that really got the markets moving up on the upside. Yellen and Draghi, they came out talking. Yellen testified before Congress and was positive on the banks and Wall Street. How do you like that? And Draghi was out defending his interest rate policy and QE policy. Neither of them really have a clue. And Musk was talking about having people live on Mars. Well, think about that. On Thursday, the markets were getting some follow through on the oil OPEC deal. Gave a little bit back, and then Deutsche Bank news came out. There were talk about 10 of the of hedge funds that were at Deutsche Bank pulling their money out. They're very, very worried and didn't want to have excess money in there, and that news came out, and Deutsche Bank collapsed, and the stock market followed on the downside. It would look like it was following through here on Friday very much, but then talk came out again and rumors that, well, Deutsche Bank's not in that much trouble, and that it's not Lehman, it's not Bear Stearns, and that news that potential talk of a DOJ Eurobank deal, including some of the other banks they're about to kill with big fines, and that got the markets moving on the upside, and you could see it's continued all the way up through the last. We now have about an hour left in the day as I'm doing this, so this is the third big update for oil. Also a little update for oil, but the market really basking in this relief rally of the potential for no of not needing a bailout for Deutsche Bank because everything is just fine. Here's our earnings and economic calendar for the week. Before the opening, as Darden on Tuesday and Micron after the close Tuesday for earnings, and Monsanto, who is in the middle of that bear deal or potential deal that the government's trying to stop. And then Yum Brands after the close. As far as news events goes, as economic calendar, you could see the ADP on Wednesday, right? That's the preliminary. That's the private sector employment. And then you get in here the employment situation in the morning on Friday, and that often can be a market mover as well. It'll be some kind of a tip-off as to whether or not they're going to be ready to raise rates in December. Do you think they're ever going to raise rates again in our lifetime? I'm working up some stuff in here on the damage that'll be done if interest rates actually do go up, the negative wealth effect of the giant decline in a market that's absolutely massive, $100 trillion in bonds. Can you imagine that? What it's going to be like when they start to fall? The negative wealth effect. That's it. That's the end of the first segment, which is the beginning of the show, and we're going to be right back with the best stocks of the week. Best of the week, the oil move, it was the OPEC deal that drove oil higher, and of course the energy stocks followed. Some big gainers when you look at the drillers. They were some of the biggest gainers in the energy group. Take a look here at Neighbor NBR. This was the best performer in the group, and this is of course the weekly chart where we're looking right now, and what you'll see in here is a breakout. Notice that head and shoulders look that you see in there. That really looks like it is the potential for some good upside move in there. And let's take a look as we pull up this drawing tool here, and you can see the breakout right over here. So nice head and shoulders. You'll note that the cycle patterns essentially make the head and shoulders, and that's always very typical of how these patterns are formed. And there's the breakout right over here on the head and shoulders. So that's pointing to a nice upside measurement. You see that way up over here at around 18, so it's trading at 12 now. Boy, that speaks well for oil holding up, doesn't it, when you see that kind of a breakout? Anyway, Neighbor's up 21% on the week, and by far the best mover out of our group of stocks that we look at. Rig, that's Transocean, another good upside mover. There's its head and shoulders measurement way up over here. Problem is, it did not break out yet, and this one actually looks like it still have some weeks to complete this pattern before it really moves up. That one up 15% on the week on a head and shoulders pattern that is, not yet completely formed. Also National Oil Well up about 8%, and Diamond Offshore up about 10%. Diamond Offshore is another one that looks to me like it's got about another month to go, so there's really mixed messages in that group. As far as the major integrated oils go, they had some big moves on the upside also. Let's take a look at a few of these in here. First one we'll look at is Marathon, MRO. This stock was one of the better movers and then started to get really sluggish in here. You can see in here as we put up our charts that have colored phasing in it, that it's in this yellow corrective phase. Now what that essentially means is that it is used up the upward time period in here, this rising phase, and then looks like it's got some correction in here. It doesn't necessarily mean it's bearish. In fact, this is kind of a bullish pattern you see in here, and if it kind of holds above the lows, then maybe out over here in November, December, it could do better. But we don't really think that this oil move is going to get much further than where it is now, at least for now, and that's probably going to get some of these pulling back. So Marathon up 10% on the week, and that was a pretty good move. Next one we'll look at is COP, ConocoPhillips. Is this one also, you can see, we'd call this a substandard rally in this positive phase. So that's this whole group of major integrated oils, despite the fact that we've had this nice pop of some 8% in oil this week, and we don't even know, of course, if that whole thing is going to hold together, that whole OPEC deal. These don't look all that great to me, and I don't expect them to get much going on the upside. In fact, Exxon is in a negative pattern in here, and some of the others like Occidental are in that also. Now this is getting a big upside pop in here this week, up about 5% on the week, and this to me looks like the spot where it's probably not going to be able to do a lot better than this. So this is, let me just move this over and you can see the group right there. That looks to me like it's not going to do a whole lot better than where it is right now. And we expect Exxon in this negative looking pattern in here to roll over pretty soon. So if it gets above this area here at 89.40, well, it's going to tell a whole different story. That's only $1.80 away. So I would expect this is about the point where it's going to start to roll over. So that's a look at the oils, except for gas. Hess is the one I want to look at here in the gas stocks, up 12% on the week. This is one that I'm long and have believed it was making a bottom. Why did I believe it was making a bottom? Well, the cyclicality in here said it was due to turn up in here. This is a big morning star right there, but now it gets up to that resistance zone. Of course, our chart subscribers get this stuff, and it also is up to the area of the 34-week moving average. So this is a spot I would expect it to stop. I have lightened up significantly on my long position in there, and I will be buying it back as we get a dip here, because I think this one is in better shape than most. Devon, DVN, also up 10% on the week. Other stocks that have had nice weeks in here, Qualcomm, QCOM, this one in talks to buy NXP Semiconductor. NXPI is the symbol in there, and it absolutely skyrocketed. And the belief is that if they buy out this stock, that it would be instantly accretive to the company. In other words, earnings would instantly get better. Look at what it did in here this week, up 11% on the week. And this is getting late in this pattern. You see that rally there. Here's the 1.618 extension. We actually thought it was going to stop here at the 100% extension. That's 100%, meaning this move on the upside and here is equal to this move on the upside and here, 100%. But this is 100.618 fib extension, and so I guess it could get there, but we actually think this is excessive and that it's likely to give some of this back. Overall, it's been in a really positive pattern, certainly, and we had no reason to really be bearish in this one at all. Take a look at Yelp, YELP. All this talk about Twitter buyout has got Yelp popping on the upside. This is one of those stocks that I am starting to think is insane. I just shorted it this week because I think that the probabilities of buying it out at this level with this crazy valuation, well, it makes no sense to me at all, and I think this stock is going to get a pretty severe pullback in here. You could see these patterns in here, the small ones. So here's the small one here, and here's the small one here. Pretty bullish, right? Gets you a big rally in here, but now we're getting to this corrective period. So I think we're going to get a couple of weeks sharp pullback in here in Yelp, and overall, I think that the prospects for this company getting bought out at these levels just makes no sense to me at all. A couple other big movers on the upside on earnings. ConAgra, CAG. This one beats on earnings. Now, this was a perfectly timed spot for this to have this upside spike and 7 or 8% gain on the week. This is the declining phase. This is the rally phase. You could see that right there. Here's the same thing that you can see right over there, and the same thing right over here. So you got the sell-off and the rally, the sell-off and the rally, the sell-off and the rally. This is where we we expect it to get a right shoulder. Now, the reason that we believe it's not going to go to a new high is this is a negatively configured cycle. That means that the low right over here is lower than this low here. It makes the odds of getting above this level, well, probably 1 in 4 or 1 in 5. So this would be a spot that it should pull back from. Again, this is only the first week up, so I would believe it would pull back, rally again, and then start to roll over there and build the right shoulder right over there. If it gets back up to this high in the bad odds of 15 or 20%, that of course it could do that, then the whole pattern would be vastly improved. We just don't see that in here in ConAgra. And the last one we're going to look at, COST, is they had a very nice beat in there. The beat, we'll give credit to the fact that they switched over to Visa, but their sales were actually down. And I think overall this is not a good pattern at all, though we're looking for a bounce in here. And you can see these two spikes tell you that that was the time period, that's the time zone that we expected a low to be made. It came actually about a week or two later, gets lower than a positive stock would get, nearing that 78.6%. So we think it'll rally in here, get a little more upside, but overall we think this is a major top in this stock. And you could see the major double top that occurred in there. And now we just get into a period of a substandard rising phase is what we think we're going to get right in here, and then roll over again for a big drop. That's our cycle forecast right there, as you can see it. So Costco, yeah, they benefit from switching over to taking Visa. That improved sales, but still same store sales down 1%. Even though they beat on the bottom line. I don't think that's a great pattern when you look at that. On the daily pattern, take a look at that one. You'll see a perfect bull kicker, and that says that a bottom is likely made for the short term, getting into this intermediate bouncing phase that we think we're getting into. That is the best for the week, and I'll be right back with the worst. Worst of the week, that's a stock that's been having, well, a lot of trouble. Caesars Entertainment, they came out and said a week ago they had a big influx of cash coming in, and that got a big pop in them, but then what happened after that was that it just gave it up this week because they do have a restructuring deal, but that deal just doesn't seem to have investors very happy. Here you could see in this Caesars chart that it tried to rally last week and then just rolls over in here. These are our cycle projections, looking like decline right through into December. We don't think that any bounce in here is going to be able to hold. As you could see, it has not for the last year. So Caesars, they really, it's really volatile, as you can see that, but the restructuring deal probably not a big help. Take a look at Hertz, HTZ. This one gets a big hit on the downside. Avis Budget, they come out and say slow down. They're really looking at weak demand, so Hertz gets a big hit, down 15% on the week, and that one looks like it has out into the end of October, based on our timing, before it can get anything real going in there. Cognizant, the next one to look at, CTSH, look at this big decline in here. Man, that is something. They come out and say that they have an internal probe on foreign affairs payments, and they have reported that to the government, to the Department of Justice. Look what has happened in here. You can see this big decline right here, big downside gap, as this one's down 13% or 12% in the week, something like that. And this, you can see this big doji in here, so that probably means that, it's seen the worst of it for a while, but, as we said, we think there's more downside. What I like seeing is our momentum indicator, the slim ribbon, giving the signal way up here at about 55, and then it drops down here to about 45, so that's a good thing. Would you say that? Retail's taken a pretty good hit in here during this week. There was some negative comments out there by analysts. Coors is the first one we're going to look at. Coors got covered by CLSA as they initiated it, and they said it is a sell. Take a look at the weekly pattern in here. We thought it was rolling over too, and you can see this pattern as it looks like it declines out into the end of November. That's our cycle projection that you see right in there that our chart subscribers get right on their TOS platform. So this one looking negative, and we would say it is certainly got some more trouble when we look at this. So that's a look at Coors. By the way, those of you that get our level 3, this one, just want to pop this in here, has got a what we call a negative 3 rating for option bias. So we've added an option bias indicator in there, which is really cool. So that is Coors, K-O-R-S. Take a look here at Dick's. I have been warning about Dick's for the last number of weeks in here. After the Olympics, I said, man, okay, so they sold a lot of gear, they sold a lot of t-shirts, but that probably is not going to last. We're getting past that time. This is a rare gravestone doji. You just don't see these on weekly charts very often. And when you see them, they essentially are saying that, well, gravestone, dead. And that's really what we expected. I'm still short Dick's and taking a tiny bit of money out of it, but I think based on this pattern, I can see the decline through around the end of October. So I think if it gets a bounce, it's going to fall again. So CLSA says sell on this, but OPCO says this is probably temporary and they would buy the dip. I'm going to fade you on that, OPCO. I don't think so. I want to sell any kind of a bounce that's in there also. ANF down 4%. That's a horrible pattern. Decker's down 4%. That one looks positive to me. I actually think you could buy the dip in the Decker's pattern because it looks like it made a bottom to me, DECK. That's Uggs boots. And the last one I want to show you is Nike while we're talking about negative things. This is one of the rare formations that you'll see when you look at the long term. When you see green-yellow like this, that means that the corrective phases are within upward trends. And then when you see the red come in like this, it means it broke a significant low. And if it does that, like this, right? You see that? The probability is the next cycle doesn't make the high level and then rolls over again. That's exactly what it did. Gets up to the 61.8% fib. We made a short side sale right somewhere in there for our subscribers. And now about, we'll call it 3 or 4 weeks still to go in this projection on the downside. And we wouldn't be surprised to see it break all the way down to that 47 number and that fake flash crash right down over there. So that's, we believe, still has some pretty good downside in there. Drugs were weaker this week also as Hillary Clinton again voices her desire to beat up on the companies that make specialty drugs. That would be a lot of the biotech companies, and she doesn't think that they have the right to price them any way that they want to. And the markets punish those who excessively price. Look what happened to Mylan, right? As it got annihilated. So Teva down 9%, Mylan down 7%, Amgen down about 4%, BristolMyers down 3%, and I actually want to take a look at that BristolMyers stock. Why is that? Well, it's been one of the worst in the group, and now it's at a real interesting spot. Take a look in here and you can see this Bristol-Myers weekly pattern. Now, we always start on the weekly charts if you didn't know that. Here's what's cool about this. So here's the cycle rhythm in here, right? The rally and the sell-off. You could see the low do right over here. The rally and really a bullish pattern as you get barely a sell-off right here. It rallies most of the time and then has only a little time to sell off. That's this right in here. So here's the formation, right? Right in there. Then the odds are that it's going to rally to a new high. So it does so again. That's that rally right in there. But then when it rolls over, it breaks this cycle low right there. That is a cycle breakdown. What it says is that it's likely to decline through the rest of the negative phase, and you could see that it did that right through here. Where are we right now? Major support that comes kind of off the monthly chart, and then a spot where it should bounce. You could see our projection in there. So this is really a key timing and key spot for Bristol-Myers. I wouldn't be surprised to see a bounce in here up to this minor resistance area somewhere between 58.5 and 60, now trading at 54.10. And this to me looks like this is cool because I like this when we get this negative downturn in the slim ribbon on the big gap, and it stays negative, as you can see right there. Still no upward momentum, so it's going to have to prove to us it's ready to turn up. But based on the timing we just showed you, it certainly looks like this is the right time for it. One more thing to look at, I talked about Caesars being an ugly pattern. Now we'll talk about Wynn Resorts. The news that came out was that the Las Vegas revenues fell by 14.7%. Well, that's bad. The month before, they said it was up by some 16%. That was good. So the stock popped, but the pattern was suggestive of the fact that we thought Wynn would be coming down one more time and setting up a nice buy. If you didn't hear me say that, maybe it was to my subscribers that I said that. But here is the pattern that we're looking at right in here. Actually, this should be a little yellow zone that's right in here, and that would be just a minor declining phase right there. We actually think that this is a buy right now as it gets down in towards this 34-week moving average. So here's your pattern in here: long rally and a small sell-off, and then likely to get into another rally phase as we have designated right in here. 50% extension number up around 115, 114. That would be my upside target for the next rally. So that's a look at Wynn, and we actually think that's one that you can win on if you buy it when it gets into this right area, right near this 94, 96 area, something like that. All right, that is our worst of the week with maybe one of the best buys that we have out there in Wynn. And right now, take a little peek at what we have here at askSlim, and then we're going to get to the short-term view. So that's all of the services that we have here at askSlim, except for one new one that's coming on board really soon. In the next couple of weeks, we will have ready a video series, a workshop that is called The 5 Essential Building Blocks to Successful Trading. I have been delivering this for quite a number of years and now have recorded it for your benefit. So you're going to be able to really benefit from a lifetime of experience for me, 42 years as a trader. Take a look at this. This is the askSlim 5 Essential Building Blocks to Successful Trading, the video workshop. What is this? It is not your everyday how-to trader workshop at all. We don't tell you how to trade. We don't talk about trading systems, none of those. This is much more about you, who you are, how you engage in the market, and getting balance so that you can perform the best that you could be. We go through 5 building blocks, as you could see, defining a healthy role for trading in your life so that you're not asking trading to do something for you that doesn't make sense and causes problems for you. We talk about building emotional fitness. That's about being able to control your reactions quickly. We're going to talk about getting balance as we match your style with method and personality. We'll talk about 6 areas of disciplines and also how to design your own trading plan and winning formula. That is really a very comprehensive, great workshop. There are 6 videos in there, hours of viewing, worksheets for you to work on so that you can develop as a trader. It'll be out in a couple weeks. If you're interested in it, you want to be on the interest list, just go to the front page on askSlim. Go to the very bottom. You'll see a puzzle piece that says 5 essential building blocks, and just click on that and we'll take your email address, and when the workshop is ready, we will let you know. This is a premium service, so yes, we're going to be charging for it, and members will get a special price. So this is, I think, an exciting workshop, and I know it's going to benefit you in an absolutely huge way. So that's the exciting announcement for today. So the next thing we're going to look at in here is our short-term view. We do this every single week, and what we do is take a look at 5 major markets. We take an accountability of how we did in the past week. We've been basically ranging between 70 and 90% for a couple of months. It's been an amazing run of really getting the short-term patterns correct. And now I gotta say that we're gonna take a dip. We would say about 55% this week as the markets got crazy on us, we want to say, because of this background news and OPEC and Deutsche Bank, and some moves were outsized compared to what we expected them to be. So take a look here as we look first at the light crude market, which is /CL. We're looking only at daily charts, and we'll see which ones went as we expected and which ones didn't, and a look at what we think will happen in the coming week. Here is light crude right here. So here it is, the daily chart. So what we expected last week, we said it would be a down week. Completely wrong. We thought it would test the area of the 78.6% at around 43.83. Well, you can see that it did that right here. That was a very good call at that point. But we said down week. We said no OPEC deal. So that makes us completely wrong, even though the beginning part of the week we really looked like we were spot on. So this is a total miss as far as we're concerned. Gets up to this minor 78.6% right at that point. We think that for the next week, that all of a sudden we're going to start to see doubts about this deal come out. And the truth is that they're letting Iran pump a lot more oil. They're letting Libya pump a lot more oil and catching up and getting their production levels up. They don't even have a deal with Russia yet, and so we're going to be coming to November before we really know if there's really a deal. I think doubts are going to start to come in. These shorter term patterns have come down to 6 days. It's unusual that all of a sudden they shorten up that much. We'd be looking for a longer pattern. So you see it's up 3 days right in here. I would expect that this is going to roll over. We're going to look for a down week this week. And we would think that it would hit the 38.2% right there, and that level is about at 46.33. It could even get lower to that, into the minor support zone. So we are looking for a down week in oil. We think this is very overdone, and will begin to correct some of this. We're not calling for any kind of a big decline into November at all. We would just be looking for a correction. So if we're right, it would fall for about 4 or 5 days like this, and get into the support zone and then have another rally. So, but that's looking out for a couple of weeks. Now we will look at the gold market, /GC. So take a closer look in here. You can see we have these nested low areas in here, which tend to bring declines into those periods. We're in one of them right now. And we thought that gold would test the 89-day moving average right over here. Right over here at around the 318 level. And you could see that it got down just below it. The low right over here is around 316. We also thought that gold would then, towards the end of the week, turn back up and get up to the 1347 area or a little higher. You see we have that drawn in here. It just didn't have enough time yet to have this upturn in here yet. So we only get partial credit for this in here because it had the downtick. It went right down to the support zone that we expected at that level. You could see we only missed the low by less than $2. And then it's getting a little bit of a bounce, but it hasn't really turned up yet. We're going to call this week an up week right now. As the GDX turns up, silver turns up, gold turns up, we expect to have somewhat of a bounce back in here. We're going to look for gold to get up to 1340, 1345 sometime in the next 5 to 8 days in there. It could run into following week. If it starts to get worse in here and gets below this level, it's going to be a different scenario underneath that 1308 level. We doubt it. That's a low probability in our minds. We're going to look for an up week in the gold market. And then after that up week, we get into a little more risk as we finish in the intermediate corrective phase. So we're only looking for a temporary up move in here and then rolling over one more time into October. That's some intermediate talk we're talking about. Next thing we'll look at /6E, which is the euro currency. So what we said in here was that we thought that it would trade in a tight range. We thought that the range would be basically the range that we had it in right in here right now, like 1170, a 111.70 low. It got down to 111.90. We thought it would get a 113 high. It had a little blip above that over here, 113.20. So we missed the range by about 20 cents, but it was pretty much as we expected. You could see a slightly lower to sideways move in here. We are expecting that there will be one more dip in here, right here. Potentially just a little bit, and then moving to the upside again. So we're gonna call it still trapped. You know, basically you see the trap right in here as it's been in the range, but you know, really getting into a small up week versus this sideways chop that we've been in. So we're gonna look for a high of 1320 to 1340. Right up over here. You see it's not very far and not doing very much to get through this range. And also a low at this 1170 number still that we told, 111.70 that we were talking about. So still looking for a range. We think if it has the 111.70 in it, it would be in the early part of the week, and then it would turn up like that. So again, tight range, and not a lot, I think, that can really stimulate it much, unless we do get the dollar downturn that we're really looking for. So now we're going to look at /ZN, the bond market. The bond market, we're going to say, was a miss. We thought that the bond market would be also pretty much in a range, and we thought a small down week. So it's actually a small up week here when you look at the ZNs. And what happened was that the flight to safety bid in because of the Deutsche Bank situation gave it a bit of a lift early in the week, and then it got into a range at a higher level that was about 3/4 of a point higher than we expected it to be. So we get no credit for that at all because it really didn't establish the levels that we expected. So what we see right now is that we're likely to get back, and we're likely to still be stuck in this range, really, is what we see. You see this range right in here? Here's what's going on. Intermediate pattern is going up. The corrective short-term pattern is right here. They're fighting each other. That's why we believe that this range in here is where it's going to be stuck for the next week. So outside of any crazy news like Deutsche Bank is not getting rescued and it's got a lot of trouble, which is a real long shot, I would say we're stuck in a tight range in here. 130.24, 131.24 is really what we're looking at right in here, as the 131.24 is right across here, 130.24 is right across under here. That tight range is really what we're looking for. And if anything, maybe a little negative bias in there, but not really much in here. We're just going to call it that it's going to be able to overcome this little negative bias because it's had this down day on Friday and be kind of in a tight range. I usually don't bring the ZBs up when I do this on Friday, but I'm going to right now because I have the range in here also that I want you to see. Here's the ZBs, and again, all of our chart subscribers get all of these support resistances and cycle projections. Same thing in here is that we think it's stuck in the range. 170.06 right over here is like the top of it, right around 167.09 right over here is the bottom of it. And we expect that because this was a pretty bad day here on Friday, that it's kind of probably going to be able to get a little upside in here this week, fooling around and then come off a little bit more before the intermediate pattern takes over again. So now let's look at the stock market. Last week what we said was that we thought it would have a dip. It would get below a support level at 21.57 and then would rally again, and it would get up to a resistance level at 21.80 to 21.88. That's pretty much what did happen, except that it didn't have enough time to get up to that 21.80 number, though I got to tell you, it's closing strong in here as we're in the last hour of the day, and who knows, but strong market here today on this relief bounce based on the potential Deutsche Bank settlement, better settlement than $14.6 billion. So let's take a look at this chart in here and take a look what we think is going to happen in the next week. So here is the S&P 500 on the daily chart. So what we thought last week was that it would come down here, test the support level right over here, and it got to the next lower support level there, close to that 89-day moving average, and then turned up. That dotted blue line is what we call the valid trend line based on cycle theory, and once the valid trend line is broken, then it usually moves to the downside. Here would be the valid trend line right in here, and you could see that's when this pattern clicked in right there. So this is a tough call, really a tough call, because we're in this rising phase and it is not doing that well. Similar to this, even though this one made a new high, this was not a strong upside phase and it brought this sell-off right in here. We think the odds, we're going to make them 2-to-1 that we break down in here this week. So you see this, we're in this rally right here. You could see this pattern right here, and then the next rally, that's what we did. That's right in here, and the next rally. So we're 3-4 days into this rally, which it's normally like about an 8 or 9 day pattern. So what that looks like is that we would probably try to get up through here, like get up to the resistance 2080, 2088, and then roll over. If it breaks this trend line here, then the pattern looks like this as these major downward cycles take over. If it gets above that level and holds and accelerates through the 2088 number, then the pattern looks different, right? Because it looks like this here and still trekking its way upward. So we're going to make the odds 2-to-1 that it breaks to the downside in here because of this deficient upside move so far. And maybe the news in Deutsche Bank comes out, they get rescued, and the market pops. Then it's going to have to follow through to prove how good it is. If some bad news comes out and we break down under this level, then I think that the more bearish scenario is in place. Again, you always hear me say, I don't like saying they may go up or they may go down. So in this case, based on what I'm seeing, I'm going to make the probabilities that 2-to-1 favor the downside based on what I see in here. It really all depends on some of this background news. So test the 2080-88 number and then turn down, and sometime around midweek for the stock market, the risk does increase. The VIX had a strange looking pattern where it exploded to the upside in a spot that it should have, and then as the relief came today, it came back to the downside. The VIX has a pattern that looks like it's going to have another pop to the upside also, so that's one of the reasons why I think that the stock market is going to not follow through and then roll over and break down through that support. So that's my gut feel, that's my sense of the charts, and that's it for the week. Don't forget, go to the website to the bottom, hit the puzzle piece that says 5 essential building blocks. That's a premium workshop, and you can just get on the list. We don't share your emails or anything, so that's safe. And then when the workshop's ready in a couple of weeks, we will then send you an email and say it's ready. You can go read stuff about it and decide whether you think it will help you, because I believe it will help you because it's embedded with my 42 years experience. That is it for Market Week for this week. We hope you have a great week, a great weekend. Be safe out there because you know it's crazy, and we're always wishing you great trading.